Hello everyone, a very good afternoon to all of you. Welcome to all aboard. Welcome to MCQ session on the Financial Stability Report. So guys, I hope I am audible. I hope I am visible. Can anyone just quickly confirm in the comment section? Good afternoon, Atiti. Okay, thanks for confirming. Okay guys, so in this particular session we are going to discuss the MCQs on the Financial Stability Report. So let's get the discussion started. You can download our All Aboard application. There you'll be getting all the notifications related to all the YouTube classes. You can also subscribe to our preparation kit. This is free of cost. You'll be getting 10 ebooks in this particular preparation kit that will definitely help you is this examination. Okay, it will definitely give you a brief idea of the examination, the PYQs, how to prepare notes, how to prepare your short notes, right? And a lot more things are also included in this preparation kit. Good afternoon, Bhakti. Good afternoon, Atiti. Good afternoon, everyone. The first question for today. So first let's first have a look at the paragraph, at the passage. Amid elevated global economic and trade policy uncertainties, the Indian economy continues to display resilience, underpinned by strong macroeconomic fundamentals and robust financial system. The economy is growing at a healthy pace. So I'm just highlighting the keywords here. With the financial system meeting the financing needs of all the sectors of the real economy, at the same time the domestic financial stability risk remain contained, as reflected in improving the asset quality, strong capital and liquidity buffer, and robust profitability of the banks and non-bank lenders. The volatility in the domestic financial markets also remained relatively low. So here, on the basis of this passage, we need to answer the question from 1st to 7. Now the question can be related to the para or it may not be related to the para. I am good, Bhakti. Thank you so much for asking. How are you all, guys? How's your preparation going? So mostly what they do is they give you a general para, right? This particular para is from your financial stability report only, right? This particular para is from your financial stability report only. Now the questions can be related to this para. They may not be related to the para as well, but in the previous year, as per the previous year questions, we have seen that generally they are not related. Okay, generally they are not related. The first question is, the RBI has projected the real GDP growth at what percentage in 25-26? Okay, so first answer I'm getting is 6.5%. Okay, any other opinion? Anyone? 6.5, second opinion. Okay. And the correct choice here is 6.5 only. Okay, option C is the correct choice. RBI has projected growth rate of 6.5% for the financial year 25-26, right? Next, according to the Financial Stability Report by the Reserve Bank of India, identify the statement that is correct. You need to identify the statements that are correct. Statement 1. Domestic inflation has been steadily declining, with the headline CPI inflation recording a 6-year low of 2.8% in May 2025. The outlook for food inflation remains bleak on account of rising prices and erratic monsoon. The risk of imported inflation largely remains high because of the recent escalation of the geopolitical tensions in the Middle East. Fourth statement. The near-term and the medium-term outlook gives greater confidence of a durable alignment of headline inflation with the target of 4%. So as per the Financial Stability Report, what do you think, guys, should be the correct choice? So as of now, I have received two responses from Meher and from Atiti. Option B. Okay. What about the others? What about others? What do you think, guys, should be the correct choice here? The correct choice here is option E, first and fourth only. Okay, first is correct, fourth is also correct, third is not correct. Okay, third is not correct and second is not correct. Why third is not correct? Although the recent escalation of the geopolitical tensions in the Middle East has led to highlighted uncertainty, still the anticipated slowdown in global economy likely to soften commodity and crude oil prices. So we are not as of now anticipating that thing. Moreover, the risk of imported inflation largely remains low as per the financial stability report. Although there are recent escalation of the geopolitical tensions, still the risk remains low only as per the RBI analysis in the financial stability report. Okay, next one. According to the FSR by the RBI, you need to again identify the correct statements. India's public debt level and primary deficit have remained relatively on the higher side as compared to the emerging market, peer emerging market. India's government debt is predominantly dollar denominated. India's fiscal position and credibility has enhanced significantly in the recent years. So out of these three, what do you think should be the correct choice? Guys, the correct choice here will be option C. Okay, option C here is the correct choice. Okay, so first and third statement is correct, right? Next, India's current account deficit stood at what percentage in 24-25? Option B, 0.6%. Okay, option B, 0.6%. Next, as of 20th June 2025, what was the foreign exchange reserve position of India? Good afternoon, Chetan. Yes, option A, 697.9 billion US dollars. Okay, option A. Next, India's external debt stood at what percentage of GDP at the year end March 2025? India's external debt stood at what percentage of the GDP at the year ended March 2025? (19.1), option A. Okay, 19.1% of the GDP. We are talking about March 2025. Identify the correct statement according to the RBI's FSR. Net FDI flows in India increased due to low repatriation and low outward FDI. First statement. Second one is foreign portfolio investments increased during 24-25. The correct choice is option D. None of these is correct. Okay. Next, according to the IMF, global public debt as a percentage of the GDP is projected to reach above what percentage this year and what percentage by the end of the decade as per the FSR? Yes, Aditi. Option D, 95% and 100% respectively, right? 95% by this year and 100% by the end of this decade. We can see here the projection as well. This is the global projection, the green line, 95%, 100% by 2030, right? Next, now citing the escalation in the trade tensions and elevated policy uncertainty, the IMF in its April 2025 World Economic Outlook has revised the global growth projection downward to what percentage in 2025 and what percentage in 2026? IMF. Correct choice here is option B. Okay, option B, 2.8% and 3% respectively. Option B, very good. Okay, 2.8% and 3% respectively. The World Bank in its June 2025 Global Economic Prospects projected a global GDP growth using the triple P weights to decelerate from 3.3% in 2024 to what percent in 2025? This is as per the World Bank. Option B, 2.9% is the correct choice. Okay, option B, 2.9%. Okay, so let's read this particular para and then we'll be discussing the question from 11 to 14. Okay. In April 2025, the market turmoil brought into focus a few key market vulnerabilities. So there were few key market vulnerabilities that were in focus. First, valuation of the US stocks, which form nearly 55% of the global equity market, remains stretched by historical standards. The forward price to earning ratio, the ratio of equity prices to the expected 12 months earning, is well above the historical median. So they are talking about the forward PE, which is well above the historical median. And equity risk premium, a measure of additional return investors require to buy stock relative to the risk-free bonds, has declined to a decadal low levels. Moreover, to justify the current valuation, the corporate earnings must grow at a robust pace, which may be difficult in an uncertain economic environment. Further, the price corrections and elevated volatility in the US equities could spill over to other markets, especially emerging economies like India. The first question, in the context of the passage, what does a decline in the equity risk premium to decadal low levels imply? What does the decline in the equity risk premium to a decadal low imply? The additional compensation investor demands for holding the equities has now decreased, right? That's why the risk premium is also at a lowest level, option C. Okay, option C. Next, the passage states that the forward PE, forward price to earning ratio, is well above the historical median What does this most likely indicate? Correct choice here is again option C. Stock valuations are high relative to their expected earning. That's what high P ratio means, that the stock valuations are high as compared to the expected earning. That's what P ratio is all about. What is P ratio? Market price per share divided by earning per share. So let's suppose if you are earning just 1 rupee, however your share is able to command a market price of 100, so your P ratio will be 100 times here, right? So that means your stock valuations are relatively higher as compared to the earnings that you are making. Next, according to the passage, why is robust corporate earnings growth necessary to justify the current stock valuation? Why is the robust corporate earning growth necessary to justify the current stock valuation? The correct choice here is option B, because the elevated equity valuations are sustainable only if future earnings rise significantly. The valuations will be sustainable only if they are backed by the future earning capacity, right? Next, based on the passage, what is a likely impact on the emerging market economies in India if US equities undergo a price correction and elevated volatility? What is the likely impact on the EME, emerging market economies like India, if the US equities undergo a price correction? Let's suppose US can the price is going down in the equity market, then what will happen to the emerging market economies like India? It was clearly mentioned in the passage. Okay, it was also mentioned in the passage. And do remember a fact that Indian market, financial market, has a good amount of correlation with the US market. So when US market is crashing down, it will definitely have a negative spillover effect on the emerging market like India. Okay, we do have a strong correlation with the US economy. Next, what does the dollar smile theory suggest about the performance of the US dollar? The dollar performs best when the US economy is growing moderately with low inflation, or the dollar weakens during the strong and weak economic conditions. The dollar strengthens during both economic booms and crises but weakens during the moderate growth. The dollar strength depends on interest rate differentials. The dollar follows no predictable pattern and driven entirely by speculation. So this statement was again mentioned in your report. Yes, option C. Option C here is the correct choice. Next is, in the current episode of exceptional economic uncertainties, the prices of the US financial assets, including the equities, have fallen, forcing the global investors to rebalance their portfolio. This has continued to the depreciation of the US dollar as global slowdown fears and fiscal worries continue to weigh on the dollar. Which of the following instruments were used by the Reserve Bank of India to inject the durable liquidity during the first half of 2025? During the first half of 2025, so this is a very straight and a very easy question. They have used OMO purchases, buy-sell swaps, right, and term variable repo rates. Option C here is the correct choice. What is the expected impact of the staggered 100 BPS CRR cut announced by the RBI? Again a very simple question. Again a very simple questions. They just wanted to release the liquidity, right? Between September to December 2025 amid liquidity shortage. So C here is the correct choice. Okay. Yes, 2.5 lakh crore की liquidity release करी थी, right? Next is, how have the RBI's liquidity rate cut measures contributed to the monetary policy effectiveness? So RBI's liquidity and rate cut measures. So RBI has infused the liquidity via CRR cut plus a repo rate cut as well. How this has contributed to the monetary policy effectiveness? It has improved the monetary policy transmission by easing the financial and credit conditions, right? Again a simple question. Option C here will be the correct choice. Next is, what indicated the tightening of the domestic financial condition during the January to March 2025? What indicated tightening domestic financial condition? Rise in the foreign exchange reserves, decline in inflation expectations, strengthening of the rupee against the dollar, widening of money and corporate bond market spread, or reduction in the repo and reverse repo rate corridors? Good to know, guys, that you are very well aware about the financial stability report. You have very well covered that report. So widening of money and corporate bond market spread was one of the reason, and here we can see in January to March the band was continuously increasing and now it is on the lower pace, right? Next, the development of a robust repo market enhances liquidity and efficiency in the corporate bond market. Accordingly, when was the AMC Repo Clearing Limited, AMC Repo Clearing Limited, ARCL in the short form, operationalized? When it was operationalized? It was operationalized in July 2023. Okay, we are talking here about the AMC Repo Clearing Limited. It was operationalized in July 2023 as a limited purpose clearing corporation for providing the clearing and settlement services. Next, India's household debt has been increasing or decreasing in the recent trend. You need to tell that. As on year-end December 2024, India's household debt was at what percentage of the GDP? Was at what percentage of the GDP? Yes, increase हुआ है, and the increase is household debt was 41.9% of the GDP. Okay, 41.9%. Option A here is the correct. ठीक है? Perfect. So here we can see the debt levels as compared to the GDP, 41.9 for India, right? Next, which of the following categories of the loans form the highest share of the household debt in India as of 31st March 2025 year ended? Was it housing loan, agriculture loan, business loan, non-housing retail loans, education loan? So Aditi has already mentioned that thing as well. Non-housing loan. Yes, Yukti. Perfect. Option D, non-housing loan, right? They were 54.9% of the total household debt. Okay. Here we can have a look from the chart as well. So what happens when we read data from the chart? We do have a pictorial memory. Otherwise, it's very difficult to remember so much of data, right? So you guys have to remember so much of data. Please do it via charts. It's very, very beneficial. Okay. Next, What was the gross NPA for the scheduled commercial banks at the year ended 31st March 2025? Gross NPA. The correct choice here is option D, 2.3%. Okay, 2.3% is the correct choice. So here we can see the gross NPA chart is at 2.3%. Okay, so this is a very good chart. I'll say it's covering most of the things like CRAR, LCR, PCR, ROA, right? Gross advances and everything. So please do have a look at this particular chart later on. According to the FSR by the RBI, which of the following factor has contributed to the soundness of scheduled commercial banks in India? Which of the following factors have contributed to the soundness of scheduled commercial banks in India? Option B, high CET1 capital, improved asset quality and robust profitability is what written in the FSR. Next, what does the term credit impulse most accurately refer to in the macroeconomics? Credit impulse. Option C, the change in the flow of new credit as a percentage of GDP. New credit, okay, new credit. What risks to bank performance are highlighted in the financial stability report due to the changing credit conditions? Due to the changing credit conditions, what risk RBI has highlighted in the financial stability report? Increasing demand for credit due to high economic growth, surging inflation, increasing bank profitability, negative credit impulse and potential slowdown in the credit demand. Option D, increase in CASA deposits reducing the interest income. Option E, strong rupee appreciation eroding the profitability. The answer is very clear here. Option C, negative credit impulse and potential slowdown in the credit demand. So there is a problem with growth of new credit as of now, right? That's why we have studied about credit impulse, and this is an important term for your examination as well. As per the RBI guidelines, how is a loan account classified as SMA2? SMA2. Option E here, okay, option E. For non-revolving loan, if the overdue remains between 61 to 90 days, okay, 61 to 90 days. So there is a criteria for SM0, for SMA1, for SMA2, right? So this is nothing but when a loan becomes an NPA. So we don't wait for the loans to become NPA. If we get an early sign of stress in the loan, we initially classify it as SMA1, SMA0, SMA2 and so on, right? If we get an early sign of stress in the loan. The NBFC sector in India remains healthy with strong capital buffers, robust interest margin and earning and low level of impairment. The gross NPA ratio of the NBFC sector at the end of the March 2025 was at what percentage? Gross NPA ratio of NBFC sector. The correct answer here will be option C, 3%. Okay, 3% here is the correct choice. Very good, Meher. So here we can see that the gross NPA was at 3%. Okay, depicted by the yellow line here. Next, NBFC, including the housing finance companies and fintech firms, account for more than what percentage of the personal loans that are below 50,000? NBFCs, HFCs and fintech firms accounts for more than what percentage of the personal loans that are below 50,000? The correct choice here is option C, 80%. Okay, 80%. They are more than 80%. They are close to 84.3% of the loans, personal loans that are below 50,000 are being captured by NBFCs with fintech companies. Okay, next is the asset under management, AUM, of the domestic mutual fund industries continue to grow and reach the record high level of how much crore in rupees in May 2025? We are talking about the AUM of the domestic mutual funds. 72.2 lakh crore. Okay. Next, as per the RBI's systemic risk survey conducted in May 2025, which of the following risk groups were perceived to have increased risk as compared to the previous survey? Financial market and climate risk, global and institutional risk, macroeconomic and financial market risk, cybersecurity and macroeconomic risk. Option E, institutional and credit risk. Option B, global and institutional risk. Okay, global and institutional risk, B. Next, which of the following risks were assessed as a high risk subcategories in the May 2025 SRS? ये 2 बजे स्टार्ट हुआ मुकुंद. Good afternoon. The correct choice here will be option C, geopolitical conflicts, equity price volatility and cyber risk. Okay, they were assessed as high risk. They were assessed as high risk. Next, identify the correct statement which, with respect to the deposits of the scheduled commercial banks, the SCB's aggregate deposits grew at 10.7% year-on-year basis during 2025. Growth in the saving account deposit continued to outpace that in the current and the term deposit. Which of the following statements are correct here? The correct choice here will be, guys, option A. Only first one is correct, second one is not correct. Okay, first one is correct, second one is not correct, and we can see here that growth in the CASA and term deposit is also good, right? This 10.7% is fine for all the SABs. The growth deposit rate was 10.7%. Okay. Next, identify the correct statement with respect to credit growth of scheduled commercial banks. The SCB's credit growth decelerated in 24-25 across the bank groups. Option second statement, credit growth of the private sector bank outpaced that of the PSBs, public sector banks, during the year after more than a decade. Statement 3, the shares of agriculture and industrial loans in the aggregate credit have been expanding, while those of services and personal loans have contracted over the last fiscal year. And the last statement is personal loan and services loan continued to remain the top two contributors to the overall credit growth of SCBs. Which of the following statements here will be correct? The correct one here is option E, first and fourth only. Okay, so only first and the fourth statement is correct. Rest of the statements are not true. Okay, so here we can see that the credit growth of public sector banks were at 12.2%, which is quite higher as compared to the private sector banks growth, right? So that's why this second statement is not correct. Okay, so basically here I have given the short explanation as well, like what statement is correct and why it is correct and why others are incorrect. Okay, plus I have pasted the screenshots of the charts as well, so that at a glance you can again remember the data, you can revise the data quickly, right? And please try to remember the data through charts only. Okay, which sector has continued to record the highest GNPA ratio? GNPA ratio highest किसका है? Agriculture is the correct choice. Okay, option B, agriculture is the correct choice here. Next, identify the correct statement with respect to the capital to risk weighted asset ratio, CRAR basically, of the scheduled commercial bank. So as of March 2025, the capital to risk weighted asset ratio of the scheduled commercial banks increased to a record high of 17.3%, first statement. Second one, public sector banks reported higher CRAR in March 2025 as compared to their September 2024, while the private sector banks reported a lower CRAR in March 2025 as compared to the September 2024. Only the first statement is correct here. Okay, second one is not correct because we can see here that the CRAR ratio of PSBs is on an uptrend as compared to, I think they have taken September 2024. Okay, so we just need to compare the blue bar with the green bar, right? Both are in uptrend only. In fact, the foreign banks bar is also on an uptrend. Okay, so only first statement is correct here. Next, now here is a paragraph and you need to answer the questions, you need to fill the blanks basically. So let's go one by one. Okay, so I'm reading the first line. Credit extended by the primary urban cooperative banks, UCBs, registered a dash year-on-year growth or decline of 7.4% in March 2025 as compared to the March 2024. So here you need to identify what will come in place of A. What will come in place of A here? Registered a lower, moderate, higher, constant. What do you think guys should be the correct choice here? Was it a growth or a decline? it was a higher level. Okay, it was at a higher level, so it will be increase. Okay, it will be increase only. The non-scheduled UCBs witnessed dash in the credit growth. The non-scheduled UCBs. So what will come in place of B? What will come in place of B? We are talking here about the non-scheduled UCBs. Whether they witnessed growth or whether they witnessed a decline in the credit growth. Increased, okay? Acceleration. The growth increased. So we can see here in the data as well. I think they are comparing from the March 2024. Okay, March 2024. So if I talk about March 2024, then this yellow line is March 2024. This green line is March 2025. So we can see here an uptrend in both SUCBs and NSUCBs. Okay. However, as per the quarter, they are in a downtrend, right? Year on year basis, they are increasing. However, quarter on quarter basis, they are declining. Okay, do remember this thing. If I talk about the SUCBs, quarter on quarter is also increasing. Year on year basis is also increasing. However, NSUCBs are quarter on quarter basis declining. However, year on year basis, they are increasing. Okay. Next, C point. The capital position of the UCBs continued to strengthen in the post-pandemic period with their CRR increasing to what percentage in March 2025? So you just need to tell the CRR of UCBs here. 16, 17, 18, 19 or 20? Correct choice is 18. Okay, correct choice is 18 here. So the CRR as of now is 18. Okay. Next, the strengthening of the capital position has been broad based across all the SUCBs and NSUCBs as well as across all the tiers. There was a barring marginal dip for the dash UCBs. For which tier of the UCBs there was a marginal dip? There was a marginal dip in which tier? Yes, डेटा बहुत सारा होता है. That's why जो ये रिपोर्ट्स आती है ना, जैसे आपकी एनुअल रिपोर्ट हो गई, आपकी फाइनेंशियल स्टेबिलिटी रिपोर्ट हो गई, और इन सारी रिपोर्ट्स के अंदर जो आपके फाइनेंस करंट अफेयर्स होते हैं, आरबीआई की सर्कुलर के की पॉइंट्स होते हैं, वो सब होते हैं. सो सबसे बेस्ट है कि इमेज फॉर्मेट में इनको याद करो, राइट? और जो कंफ्यूजिंग डेटा है उसको एक ही जगह लिख दो. जो कंफ्यूजिंग डेटा है उसको एक ही जगह लिख दो. Tier 1, okay, Tier 1. Next question. As per the RBI's latest stress testing exercise, which of the following statement is correct regarding the urban cooperative banks? ये बहुत सिंपल है. This is very simple. I think इसका आंसर तो सब लोग दे दोगे. ऑप्शंस बहुत ही स्ट्रेट है. और एग्जाम में भी इसी तरह का बैलेंस होता है. ऐसा नहीं होता कि सारे डिफिकल्ट क्वेश्चंस आते हैं. कुछ सिंपल आते हैं, कुछ मॉडरेट आते हैं, कुछ डिफिकल्ट भी आते हैं. Okay, and we always need to create that balance. Correct answer here is option C. So stress testing was conducted for the 213 UCBs with asset size over 500 crore, excluding those under the AID all inclusive directions. Okay, option C. Next is UCBs in tier 2, tier 3, tier 4 need to achieve the CRAR of at least what percentage by March 2026? Very, very important. Option B 12%. They need to minimum maintain 12% as of now for tier 2, tier 3, tier 4. Okay, 12%. Next, the solvency ratio of the insurance company, important, assesses the ability of the insurer to meet its obligation towards the policyholder by reflecting the level of its assets over and above its liabilities. The minimum solvency ratio prescribed by the IRDAI for insurance companies in India is what percentage? Yes, ये तो सबको आना चाहिए ना, मल्टीपल रिपोर्ट्स में आ चुका है, फाइनेंस करंट अफेयर्स में आ चुका है. द करेक्ट चॉइस हियर इज ऑप्शन सी 150%. ओके, 150%. Next is the Deposit Insurance and Credit Guarantee Corporation, DICGC, extends the insurance cover to depositors of all the banks operating in India. As of March 2025, the number of banks that are registered with the DICGC was at what number as per the FSR? (1982). Okay, last question for today, and this is your homework question, so do let me know in the comment section later on. With the present deposit insurance limit of 5 lakh, more than what percentage of the total number of deposit accounts were fully insured, and more than what percentage of the total value of all the assessable deposits were insured on March 2025? I think ये तो हमने कहीं अभी रिसेंटली डिस्कस भी किया था. आई थिंक ये तो हमने या तो पेड क्लास में डिस्कस किया था 1-2 दिन पहले, या फिर मैंने लास्ट फाइनेंस करंट अफेयर्स में डिस्कस किया था, मुझे याद नहीं आ रहा एग्जैक्टली, पर ये क्वेश्चन हमने डिस्कस किया हुआ है. ओके, सो ड्रॉप मी योर थॉट्स इन द कमेंट सेक्शन लेटर ऑन व्हाट शुड बी द करेक्ट चॉइस, और इसका आंसर मैं आपको कमेंट सेक्शन में ही बताऊंगा बाद में. ओके गाइज, सो थैंक यू सो मच फॉर टुडे. लेट्स क्लोज द सेशन. थैंक यू सो मच फॉर ज्वाइनिंग, और मिलते हैं आज के 8 बजे वाले सेशन में रिलेटेड टू योर PFRDA क्वेश्चंस, कॉमर्स एंड अकाउंटेंसी रिविजन Part 2. Okay, so thank you so much. Bye bye. Take care. Have a great day. मिलते हैं रात को 8 बजे.